Let's connect with Mihir Vora and let's take our conversation forward. Mihir, we've seen a real adjustment at a global level. China has come back. The Trump trade is taking US financial assets and assets like Bitcoin to a different level. And Indian markets, they continue to underperform. What is your understanding of the world and where do you see markets headed in the near term?
So I think it's a function of a couple of things. One is, of course, the Trump trade is a big one where the dollar is strengthening, which is sucking away money from most asset classes into Bitcoin, into the US markets. So that's a big one. We don't know how long that that will last. But I think a lot of it might already be over given the sharpness with which the markets have reacted in the last 3 weeks. So I think if you look at the past few days, there is some let up in the FII selling. The numbers are reducing a bit. So hopefully the worst of daily FII selling is over past us. Second is, if you look at the broader markets, the results have not been that bad, frankly speaking. If you look at the Nifty, we have seen earnings downgrade, 3, 4, 5% earnings downgrade after the result season. But if I look at the broader markets, things are not that bad. So we are not seeing that much of a downgrade in the mid cap, small cap, and the beyond the top 50 stocks. My guess is that the big Nifty, the top 50 stocks are a bit more global in nature. If you look at the composition of the Nifty, it's a lot of it is financials, 30-40% is financials. Then 15% would be IT. Then you have energy, metals, oil and gas, utilities, commodities. So all these make the Nifty a bit more global in nature. To that extent, a lot of the domestic story is being played out in the broader market. So I think we need to kind of maybe shift our focus a bit away from the Nifty into the broader markets also.
Could you give us an example when you say that the broader market earnings have not been that bad? Where are you excited? Where are you picking your spots?
So if I look at the NSE 500, overall there is not much of a downgrade there. If I look at the small cap index, again, not much of a downgrade in earnings there. And we just attended, there were almost 3-4 conferences in the last couple of weeks. I'm sure you were there in some of those. And if you look at the confidence of some of the mid caps and small caps, the visibility of growth that's happening, you come back with a different energy after looking at the market, frankly speaking. So to that extent, things are not all lost. We need to make sure that we pick the right stocks and sectors. And there are a lot of stocks which have a good and visible long runway of growth. So we would not say that there are no stock picks available as of now.
Mihir, you just talked about financials, and within financials as well, you're seeing a very interesting dynamic build up. Many are betting on underperformers like HDFC Bank, ICICI Bank of late. One has seen that is sort of consolidating. And then, of course, MFIs is a different story altogether. How do you think these large cap banks are going to maneuver, and who do you think is going to, come back as a leader whenever banks resurrect?
See, in the large cap banks, the options are frankly narrowing, I would say, and they are becoming more of a proxy of the economy rather than huge alpha generators. So we have seen that typically the banking system credit growth is 1.2, 1.3, 1.4 times that of the GDP growth. So that equation will continue. So in a upcycle like this, banks in general will outperform for sure. But I don't think we have the kind of large banks now which are going to give you 25% CAGR going forward. For that, you probably need to look into the non-lenders or even some of the NBFCs which are relatively smaller in size, which are more nimble, so to say. So I think it's time that we start looking at lenders as a proxy to the economy plus something. And the non-lenders, basically all the segments which are probably catering to the savings pool, which is expanding rapidly. So whether we are talking about wealth management, broking, asset management, insurance, capital market, depository participants, R&D agents, etc. That whole ecosystem, which basically caters to the rising savings pool, rising affluence, rising capital market exposure of HNIs and retail investors, that probably will outperform the financials, the lending financials.
Mihir, a bit of a broad question then in terms of looking at the overall spending power that we have seen has picked up, be it airports, be it shopping malls, etc. And it seems like the premium end of the segment has been doing a lot of that heavy lifting. How are you looking at that overall consumption theme if I were to take travel, hospitality, retail, QSR into the same basket as well?
Sure, I think we've discussed this earlier. That's also one of the things that we have, always liked. That's the premiumization of consumption, along with the financialization of savings that we just discussed about the non-lenders. So that theme will continue, and that's a function of sheer demographics, as we have discussed. As income levels rise, the rise of the number of people in terms of percentage is always higher at the higher income level, and we will see continued higher growth rates in these premium categories, whether it's consumer durables, whether it's mobile phones, whether it's cars, whether it's hotels, hospitality, travel tourism, or even jewelry, for example. Those segments will continue to grow faster, and that's a long-term theme.
There are a lot of side themes which suddenly have emerged here. For example, solar, EVs, wire and cables, a bet on energy transition. Where do you think there is an opportunity and where do you think there are excesses? EV, solar, wire transmission, energy transmission.
There is opportunity everywhere. Frankly, transmission, again, I'm very bullish on, because it also goes with the renewables theme, where having solar and wind contribute a larger and larger proportion to the grid means that the grid has to be much more resilient and much more higher capacity than before. So we have to have capacity not only in the grid, extra capacity not only in the grid, but also in the storage part. So a huge amount of investments going into storage. But having said that, there are certain companies which probably are relying a bit on government or tariffs, etc. We would avoid those, and we would actually prefer to be in the asset owners in the renewables space, where they actually supplying power to the grid and making money like that. EPC players, they might do well for some time, but I don't know how to value them, frankly speaking, given the vagaries of policy, etc. But asset owners, we definitely like. Transmission and distribution companies, we definitely like. So we are picking and choosing. We also like the wind space, turbine manufacturers, etc. We have exposure there too. So that's an exciting space to be in. The other things that probably are working well is the advent of data centers. So there's a whole ecosystem of data centers that caters to this segment. So there are some plays in that, and that's what I was saying. Because that a lot of these are mid and small cap plays. So if you want to be in these exciting sectors, we have to look beyond the top 50, top 100 stocks.
A lot of election news has dominated this year. Local elections, state elections, US elections. That news is unlikely to be a market influence, at least in 2025. So what do you think will be the theme from now for next year, as in from now to entire 2025? What could be that overarching theme?
First is government spending has to pick up. We have seen quite a slowdown in government spending because of the election this year. So hopefully the second half should be much better in government spending. That's one of the reasons why we are seeing sluggishness in some of the results. And second is execution. I think a lot depends on now. There's not much to be done on the tax side. A little bit here and there can happen, but now the government has to go back to execution, and all the schemes that the government is implementing in PLI, etc. We have to work a lot on ease of doing business. The private sector investments have to pick up now.
Are you somewhere surprised that IT is done well despite the odds? I mean, barring Infosys, none of the IT companies have come out with a decent outlook. Forget about rosy outlook, yet the IT index is not far away from its all-time high. So is this pure currency and defensive nature of the market which is driving IT stocks up, and as economy normalizes, demand comes back, government spending picks up, IT stocks could go back and take a backseat again?
Well, actually, the recent rally that we've seen in IT is more of a Trump trade, with Trump promising to cut corporate taxes. There is hope, and of course, increase import tariffs for the US. There is a big trade going on of investing in the US. The assumption is that companies with having lower tax rates will encourage companies to invest in the US. So a lot of corporate investments is supposed to kickstart in the US, and that's where the IT spending can go up, because as corporates invest, obviously they have to invest in IT also. So the recent rally, I would say, is more of a Trump trade because of tariff barriers as well as lower tax rate expectations.
Okay, fair enough. And how would you, what do you think would be the biggest risk to earnings this time around? Is that going to be a concern when it comes to the coming quarters? Because this quarter, it hasn't been too much of an, above estimate performance for companies across the board.
Three points I would like to say. Government spending has to pick up, which has been sluggish. Second is there are some green shoots of consumer demand coming back because recently there's buzz about urban spending, being a bit weak. But hopefully with the busy season coming for us in terms of rural and the normal cyclical uptick that we see in the second half, urban consumption is something that we need to look at. And third is execution by the government. We have to execute well on the private sector side. We have to improve ease of business, and we need to see far more traction on private sector investments.
Okay, Mihir, so good to have you on the show. Thank you for taking the time out and speaking with us today.
It was a pleasure.
If you like this video, then like, share and subscribe to ET Now.